Boom shakalaka. Maybe I should start the show like that today. Boom shakalaka. Let me see. Am I big cam? Am I big cam worthy? Put on do not disturb. Let's look at. I got Active Trader Pro active, so we'll go over there. Where is Active Trader Pro? There it is. I got Active Trader Pro. You can see I got NVIDIA up. Has it hit 500 yet? It's at 493. I've been meaning to rebuy this. I got stuck. I will probably rebuy it at a higher price than I actually sold it at. Unbelievable move in the past couple of days. I mean, just come on. We've all been there. We've all made that mistake. Let me get into YouTube. Let's see if it shows. It doesn't even show me as live. You douchebag. I'm going to hit the thumbs up. Let's see. Morning, Q-Tip. By the way, a lot of people signed up for TrendSpider yesterday. It's good to see. I am not bullshitting you. I mean, listen, I myself paid for TrendSpider. So, VinFast. Let's see if we're back in on the 65 minute. I think we will be. Yeah, we will be on the open. Let's put that. VFS. Morning, T-Dog. VFS. Pull back on the 65 minute. We'll be in on the open. I want to see QQQ. QQQ, yeah, SPY. Let's see. Let's just make sure I'm saying this right. I want to say on the daily. Sometimes I guess, but yeah, on the daily. Let's look at SPY on the daily. Yeah, IONQ is Brandon's favorite, and I was looking. Yep, we regained it. Remove all annotations. Yes, we got that bear flag out of the way. Boom. Let me see if I get out of strategy tester. Can you still see? Yeah, you can still see everything. I mean, you can't see the RSI, but it's the chart that matters. Larry, IONQ. Let's see IONQ. IONQ, you're in at 1469. You're at 1712. I mean, that's IONQ on the algorithm makes you 600% over 2 years. Makes you 72% if you just buy and held. On the 65 minute, IONQ makes you 121% versus 393% over 8 months. So timing matters, but you are in at 1537. Looks like there's a button hook happening. I'd look for it to kind of pull back to this 200-day, but I mean, this stock, I mean, it defies all logic. Come on. It's Brandon. It's good. I'll put that in the... Hey, that's what the whole group is about, is making sure that people... listen, if you didn't bring up some crazy stuff, and that's why I'm typical, there's some people that kind of always are in the retail trader, and they're saying, hey, this is the next hot stock and blah, blah, blah. Sift through the noise, and you find something that's good to trade. I still don't think IONQ is a holder. I think it's a trader. There's here. This one got me. I'll send you this link to my tweet. This got me because it's basically a visual representation of the top, I think, 10 holdings, the top 25 holdings over time of Berkshire Hathaway. This is May 2002. Apple's not in here. Nike's down there. M&T. Watch how Wells Fargo comes up. Wells Fargo is now number 4. It's going to come up. Coca-Cola is a mainstay up there. I mean, he just buys and holds it. The dude has a Coke a day. So here's the, Wells Fargo comes up, Procter & Gamble comes up, Coca-Cola, American Express starts being, and during this time, I mean, it's soaring. So this isn't a good time in the stock market at all. 2008 is the housing crisis. So some of these companies, like oil companies, started to shoot up as bigger portions of the top 10. But you can see Apple's not here at all. Not one bit. And so you'll see it come up. I think it's 2017. It starts to come up. I don't even see Apple in this list at all. Let me see when it first starts coming up. I don't see. I mean, there's GM. I mean, he lost a shit ton on GM, but he made some money on it. Tesla's not in here. You don't see him going Tesla. Visa, IBM. I don't see Apple. There's 2015. I mean, we still don't have Apple. They're Apple. In 2016, Apple makes its first appearance. 2016. And it continues to climb. And he can't buy enough. And look at the share of holdings. And it goes down. And it's because Apple's share price went down. And then it just continued to soar. So this is my point is IONQ, you don't have to be the first shareholder to benefit from this. You just have to add to it consistently at key times and dollar cost average your way in as it goes up. If you're dollar cost averaging your position, you're good. I mean, that's what that video shows. 100%. That's what, and I'll show this again during the podcast. I don't want that to make noise. But that's where I say, hey, IONQ is a good trade. That's why I say it. I did not have as much. I shouldn't have had as much conviction in Apple as I did in 2004 and stuff. It wound up being a perfect buy and hold stock. But portfolio management, hey, sometimes you have to get out of those. And his love of Coke, I mean, Coke has done, if we look at Coke, okay, we look at KO. Boy, this guy with his green screen behind him. And we just go on a monthly. I mean, it's been a solid performer. But if we go to Seeking Alpha and we go to Coke and we go over a 5-year to SPY, I'd be shocked if this is, you know what? We'll go QQQ and SPY. And we'll look at those two. And we'll go 5 years. I mean, Coke is at 34%. So it's not beating SPY or QQQ. And that's one of the largest ones. So stock picking does matter, but you can't argue with Warren Buffett. It's still in an upward trajectory. I mean, look at the 200-day. Look at how far above the 200-day it is. Probably should be trimming it, to be honest, with it that high. And I trimmed it in December of last year. So I do think, listen, there's some portfolio management there that Buffett has been much, much better than the average person. And he says it all the time. If you don't want to, or if you test yourself and you don't consistently beat the S&P, just buy VOO. If you don't beat QQQ, just buy QQQ. Whichever index you want to want to track should be your guide. And there's no downside to having, 60%, 40%, whatever you're comfortable with in just indexes. I mean, you could do that and then have a large portion in other stocks. In fact, I've got, what do I have? I'll tell you right now. Clear, boom, boom, boom. Let's see, I'll go into Fidelity. I'll tell you which indexes I have. I do not have SPY or VOO. And I don't own QQQ, ironically. But I have spider indexes. Let's see. All positions. So, as far as ETFs go, I have IGM. I have, which is a growth strategy, which hasn't worked very well. It worked really well for the first few years that I had it, and I need to trim it down a little bit. I have, a lot more than I want in there. Wow, that's a six-figure. That's more than I thought. But I'm up. Let me see. IGM. We'll chart IGM real quick. I'm up 97% in that. In what? 3 years? 4 years? So, let's look at a long term of this one. We'll look at a weekly. So, it's getting back up there. I mean, 442 was the high. I probably should have sold out here, could have added more, but it's done well. I mean, this is just the tech sector. So IGM has done well. Not as well as others, but IGM, I'll take it. Again, I'm up 94% on it. But yes, last year hurt holding it. I didn't trim it. Should have. QCLN. You will see this one is a nightmare that I actually have in the core portfolio. I like it. I still seem to just want to hold it from my hippie self. I have it in there. It's hit the 200-day. It broke the 200-day. This one was all the way up at 90. It's at 47 right now. And it hit 90 twice. 85. You can kind of count that as a double top right there. But as it pulled more towards the 200-day is an opportunity. It's a clean energy ETF, and this is all the solar stocks. I have, let's see, Uber, Ulta, Wells Fargo, XLK. I have a ton of XLK. I don't know if I sold. Let me see if I sold XLK. I have 5 figures of XLK, mid 5 figures. Yeah, a little bit more. I am up 204% on XLK on average. So XLK, I have 2 lots of it, one in my retirement and one in my brokerage. I have, and this one, we can look at XLK. I mean, this has been a solid one. Has it outperformed? Nope, not one bit. It hasn't outperformed. You can see it's just back to where it was trading back in 2021, XLK. This is not one that you trade, but I've got XLK and I've got XLY. And the only reason I have XLY is because XLY is consumer discretionary. And guess what is the top holding in consumer discretionary? It's Tesla. Here, let's go over to here and we'll look at XLY. And we'll go holdings. Top 10 holding. Ooh, Amazon now owns the top spot. Amazon, Tesla, Home Depot, Lowe's. I mean, Amazon and Tesla basically own this one. And so if we look at a weekly, it's still got room to grow. So that's my entire ETF portfolio. And I probably should have saved that but you guys got the exclusive for tuning in. But I am going to add Qs, and I'll talk about this in the podcast. I am going to add Qs, and I am probably going to add VOO. VGT is really good. This is the Vanguard Information Tech. And VGT is kind of the same thing as the Spider, but VGT takes out less expenses. And here, let's do this. VGT versus XLK. Let's do charting for just a few years. XLK. It's very similar, but VGT does have a lower expense. You can see VGT gets 25%, XLK 27%. That's over 1 year. If we go to 5 years, VGT 119 versus 131. There's no, I mean, it's so minuscule. Yeah, it's a 10% higher over 5 years. But this could have been turned around. I mean, just look at the holdings. Let's look at the holdings of VGT. Top 10, Apple, Microsoft, NVIDIA, Broadcom. NVIDIA is 4%. Apple is the largest in VGT. If we go to XLK and we look at the holdings, Apple, Microsoft, NVIDIA is 5%. I mean, that's essentially where XLK wins over VGT, is it just has a higher percentage of NVIDIA. That's it. I mean, no difference, but it's just got a higher level percentage in that one. So, but they're so similar. I don't think you're doing anything here. Expenses, expense ratio is 0.49 for XLK, VGT 0.49, same thing. So it's got the same expense ratio. I lied. But yeah, you're not doing yourself any disfavor by owning either one of those. I like them both. I just got into the spider sectors because I knew the spider sectors, and I only got into Vanguard when I really got my 401k and my retirement money where I could manage it myself. And I didn't buy Vanguard. I just was like, hey, if I want more ETFs and I don't want to buy into the spider stuff, I'll buy into Vanguard. Shopify. By the way, Amazon implemented a buy now with Shopify. Shopify's up 7%. Just hit its 200-day. Are you in on this one yet? I mean, shop up. I mean, this is the no-brainer. 100% the no-brainer. I might add more to this. I think, and I've gone over this many times before. Here's where I think we're going back. I thought there was a gap here. Maybe not. Let's look at this weekly. Yeah, I think you're going to use that 200-day. I thought there was a gap at like 80. But I think it's an $80 stock. I think you're going to use that 200-day as resistance. And if you break through that resistance, it's off. I mean, this is the new Amazon, Shopify. They get rid of their fulfillment. What was that company that made biodiesel? Remember, you covered it like 6. Oh, God. Half of those, Brandon, are trades, and I just forget about it. I'll tell you what. I'll look back. I'll do a search in my notes. I kind of keep my notes. I do different. If you're in the Apple ecosystem, I use Apple Notes for all my notes, and I love it. It's in the iCloud. It's on all my devices. Oh my God, I'm super bullish Apple just for my workflow. But I use Apple Notes, and I start a new note usually about once every 2 weeks or so. I keep them, but I do delete them. So 6 months ago, I might have deleted that note, but I'll look at it. Let's see. What company makes bio? No. What company makes fuel? Is it REG? Let's see. Only necessary. REG, Sinclair, Cargill, AG. Oh, Marathon. Marathon. VTNR. Okay. I didn't even know that I went over that one. What is VTNR? I think that was a trade if I'm not. Vertex. Vertex. It's kind of ringing a bell. Vertex. They're losing money. Yeah. Vertex. Insider. Oh, did I cover it? No, maybe not the insider buy. I don't know why I covered it. But, listen, a couple months ago, if I was saying buy here at 6, no. Man, it's down 30%. Okay, let's start doing some scans. By the way, there were a ton of people that took advantage of the TrendSpider offer yesterday. If you didn't get remember the process. The process for this is you sign up using my link, then you send me an email, and I send you a welcome letter. There's no automated process. For privacy purposes, you can't sign up for TrendSpider and me have your email address. It's basically your business relationship is with TrendSpider. I'm simply an affiliate. So they don't send me your email address. They give me a portion of it so I can kind of figure it out. But when you email me, just email me the email that you did, and I'll reply back. Yeah, it's SPY-I. SPY-I pays on a monthly basis. And I will tell you, SPY-I, let me go in and look. I will tell you what, I was going to look at SPY-I because it's in my healthcare savings account. And let's see. So my position in SPY-I, I am up 0.26%. My average cost is $49.31. I own 200 shares of this in an HSA. And it pays out about 1% up until last week. Let's look at SPY-I. I'll do a quick look at SPY-I because I want to show you where I was. We're going to look at a 4-hour. Let's look at a daily. We'll look at a daily. So SPY-I. No, I don't want SPY-I. That little tranche here, if you were to have purchased SPY-I up here, okay? Say you purchased, this is July. Let's go back here. You buy in June 5th, okay? It's 1% per month. It's about a 12% dividend, so it turns out to be about 1% per month. If you bought there, and all of a sudden you're down here, you've gotten 2 months, so you've gotten 2% payment, but you're down 4%, okay? That, it means you're in the negative. This is how quick this will move. Over just 3 days? SPY-I went from down 4% from your purchase price to down 1.18. So you've gotten your 2%. So again, I reinvest. I don't reinvest my dividend. It's an HSA. I don't spend my money. And for those of you, I know Scott is a paid member. For those of you that didn't maybe pay for my newsletter, in fact, I need to look that up. I wrote a little thing about how I maximize taxes. It's a paid newsletter. Let me see how NVIDIA is helping me understand the market, IRA versus, I think it was, let's see, which one was it? It was maybe tax plan. This is a paid newsletter. So I went over it here, and maybe I didn't convey it very well, but SPY is in my HSA. I wanted something to put off some actual income in SPY, because if I put off income, I can a high level of income, I can actually use that HSA money to pay for healthcare costs. So say, for instance, I have $50,000 in my HSA, and there's not a lot of people with $50,000 in your HSA, because you can only contribute like $3,000 a year. But I've been lucky enough to be able to put it into an HSA, grow it, and I've got a little bit more than $50,000. But I took $10,000 and I put it into SPY. So I've gotten, what is it? Yeah, it's $1,000. I'm sorry. 1% is, what's 1%? Is it $100 or $1,000? What's 1% of 1,000?
It's 10.
Yeah, so it's 100. I'm getting $100, $100 a month. So I get $1,200 a year. I don't spend money on healthcare. I'll spend about $1,000 a year. So the question that I have is, okay, how do I generate $1,000 a year to cover my costs if I need the money? Now, in an HSA, from a tax perspective, there is no statute of limitations where you have to take that money out. That money can stay in that tax plan and grow and beneficially grow. So, for instance, I just paid $3,000 for my wisdom teeth to get taken out. Am I taking that $3,000 out of my HSA to pay? No, I am paying with after-tax money from my brokerage or wherever I'm making money, wherever I've got $3,000. I'm taking that $3,000 and I am holding the receipt. And so, if I ever get short on money, on actual cash, if I ever get, to the point where I want to take $3,000 out of my HSA, there's no age limit on this. It just needs to be spent on healthcare. So essentially, I take that $3,000 out whenever I want. And then on my taxes, I tell the IRS, hey, I just took $3,000 out, and here's the receipt. So the HSA, this is why I tell you guys, and why I preach on people, understand taxes and how it can benefit you. Holding your money in an HSA, just because you put money, now an HRA is different. You have to spend that during the year. You have to have a high deductible plan. So my current healthcare plan is $9,000 a year. That's my deductible just on my healthcare. So I have to spend $9,000 before the damn thing pays anything. And the wisdom teeth don't count because it's freaking dental. But I will, not to go into too much of this stuff, but understand your taxes. I'm just not taking the money out. But yeah, SPY is a good one. I will warn you. Here's the warning about SPY. It's new. It has not gone through a lot of quote unquote testing. So we don't know what it will do over like a bear market. It just started last year in September. So you're right. You don't know what the hell is going to happen to this one. If you're in TrendSpider, I've got a covered call ETF, and this is where SPY is. There's JEPI, there's JEPQ, there's QYLE, QYLG, XYLD, RYLD, XYLG. I've got that and you get that with the welcome letter. You get all of these watch lists that I have, so you can pick and choose which one you want to do. What the algorithm does on this is it will scan this group, not the algorithm, but the scanner, the market scanner that I provide you. It will scan this group and say, okay, here's a good time to get into this. So here, if we go to SPY and we just go to the strategy tester, the scanner, you don't have to sit and watch charts. This is what TrendSpider does. You have to sit and watch charts. You set up an alert and say, hey, when the algorithm tells me to get in here at 4850, I want to text. And it'll text you. Or you sit down every morning and just scan this group and say, okay, which ones have an entry? 4850, great entry point. Like I said, I think my entry point's like 49 something. I bought somewhere in this neighborhood. So I'm a little bit up, but I just bought it in, I think June or July. It must have been June. Or I'm sorry, it must have been, I think it was around here actually. I don't know if I got the June payment. I know I got the July payment and I got the August payment. So LMNOP. I don't even see that one. Christian. Morning, Sherry. NVDY. What's NVDY? Oh, this is the NVIDIA yield. Yeah, they're throwing off some stuff. Okay, let me get to scans. I'm never going to get done. I have not taken a pain pill this morning. So, high five to me. I have not taken a pain pill this morning. I'm shocked. I am still in pain. Doesn't mean that I'm not in pain. But I have not taken a pain pill this morning. Okay, so let's look at brokerage holdings first. Scans. Oxy, cross up. Get your oil while you can. PXD, cross up. Crowd, after earnings, cross up. Amazon, after announcing with Shopify, cross up. Disney, cross up. They're going to sell their ESPN to Apple, get a bunch of cash, pay down some of their debt. Cross up. Let's see, covered call ETFs, nothing. Scott, hopefully I explained why. In order to, I'm in a high net worth group. It's called Long Angle. And here, Long Angle. If anybody's worth over a couple $1 million, I think they upped it to like 3 or 4 million. I don't know what. But you can join this group. Just ask me for an invite. You have to prove your net worth. You have to go through interviews to get into this. There is no initiation fee. There's no community fee. There's nothing. It is fantastic. It is super private. You can't solicit in there. They are super kind of just, it's tight. It's tight. I mean, it's a tight group. But there was a discussion yesterday, a great discussion about, hey, I'm getting ready for retirement. What do I need to look for? And what are the things that I need to understand? And so, a lot of it, I've been retired now for 3 years. I retired at 49. It'll be 4 in January. I was 49 and a half. But you have to understand income versus investment. For instance, I don't live off of dividends. I don't live off of that kind of stuff. I don't need income. I have enough cash, and I trade enough, and I work a part-time job that I don't have to worry about that. I don't have to worry about income. There are some people who want income. And the part of the discussion that was really good is when you get to this retirement level, most of us in that high net worth group are savers. We haven't, a lot of those guys aren't born into wealth. They've made their wealth through different investment kind of things, real estate, owning a company, some type of product that they invented, blah, blah, blah. In fact, I think it's the CEO of Betterment. I think he was in there yesterday. There was a good discussion on that. But I have a view of dividends that a high dividend stock is not good unless it gives you capital appreciation with it. And that's why I'm typically not for SPY, typically for your realty, your REITs, because you get a decaying asset but you get a nice dividend. So they return you, but if you're living off of that, you can deal with the decaying asset, because if you're living off your dividends, you need the dividend, you need the cash now. So there's a great Scott, if I had a couple $1,000,000 lying around, I would, but no. I am on the super low end of that group, and I am God. I mean, I think they let me in just to kind of humor me or have some type of personality in there. I've got some great friends in there, and some people that I know that I've personally invited there. I got invited by a executive VP of Microsoft who is a personal friend, and she's fantastic. And it was funny because she didn't know I was so heavily into stocks. And when I retired, she's like, holy shit. I mean, we were friends for years. And she's like, holy shit, you retired at 49. I'm like, yeah, I just got sick of it. And she's like, you can? I'm like, yeah, I don't present myself like I have money at all. And I don't like people knowing that I have money. So it's very odd of me to come on here and say anything like that. But it's interesting because now, every time Microsoft, I mean, I can almost tell you when she invited me, she's a paying member of my my newsletter. She's supporter of the podcast. She might be listening now. Who knows? But very good friend. And so, why is TrendSpider doing this? I think they got slammed yesterday. I think with sales. We'll relog in. But if we look at the Microsoft chart, I can almost tell you exactly where she texted me with, I've got a family to feed. What am I doing? I can't have all my money tied up in this. How do I get my money out? HR is telling me I can't. First world EVP problems. But you can see Microsoft on a 4-hour. I mean, come on. It just hit the 200-day. Buy it. Just buy it. Okay, we did energy names. We're going to go levered ETFs. I think the upside past that, nothing. Upside is already in. Let's see the low cost Vanguard. Anything, nothing from there. I mean, we're already in. Let's see if any spider sectors. No spider sectors. Let's see anything from my not owned list. Oxy, Tilray. We'll put in Tilray. Why not? Tilray. AbbVie. This has been a healthcare stock that has slumped. But I think you see it. See, it's put in that support right there at the 50-day, at the 200-day. This one might be tough to get back here, but it's only 142 if you bought it right now. Versus if it comes back to fill this gap at 160, you might like that. Yeah, VIG is a good one. It's a great one. Brandon, my thoughts on ETFs are one of the reasons I got out of ARK is because the losses were too big. She charges 5%. If we go over to Seeking Alpha and we can look at ARK-K, and we go over to expenses, you can see it's 0.49. If we go to something like VGI, or which one's the growth? Vanguard growth. VUG. VUG is it. They're at 0.492. See the growth ones, because they get in and out. 0.49. Why is this? Oh, that's median all to ETFs. Okay. VOO is, here it is. VOO is 0.03. VIG 0.06. Vanguard growth VUG 0.04. So that's one. ARKK 0.75. That's I mean, is she good enough to justify 0.75 versus VUG? Let's see. Let's look at ARKK and we'll put in VUG. I mean, the increased expenses, look, I mean, that's 1 year. 3 year, she underperforms there. 5 year, she underperforms there. I mean, that's where I kind of said, hey, Brandon, you got to know the manager of the fund. You have to know the fund's expenses and stuff like that. I think it's safer for the U.S. as a whole. In that, like I said, in that high net worth group, I was shocked. By the way, I should go to small head. Shocked at how many people in that group buy VOO and just forget about it. I mean, we're talking millions. There's a guy who, my estimation, $120 million in investments. It's all in VOO. He's like, I don't trust anybody to manage my money. He made all of his own money, sold a bunch of companies. My guess is it's $100 million is what he's worth. But yeah. Christian VIG is good. I like dividend. And Roth and HSA, there's nothing wrong with dividends. Again, I never want to down dividends. For me, as a probably 8 out of 10 risk investor, dividends to me just indicate that the stock appreciation might not go up. Now, what's a difference to that? PXD. I mean, listen, oil was down. When it was under 200, I said, I'm going to sit there and buy this one. No, I will go over Shopify again. Basically, it's an Amazon thing. They have a partnership with Amazon now. I think it's got to be in here. They got a Amazon Shopify strike deal to open Amazon logistics to sellers. Let me see the details of this. Buy with Prime. Yep, buy with Prime. We'll just include that in the newsletter. Where is my Shopify note? Chewy. There it is. Okay. Oh, it's going to 80, Sherry. It's going to 80. I mean, no doubt in my mind, Shopify's going to 80. So, okay, you guys distract me too much. I got to start on these scans. Okay, we did the not owned. Till rate, I might as well include AbbVie. It's huge. See, so remember, Buy with Prime integrates Prime membership. It also integrates, it tells me that because Shopify got out of the fulfillment stuff, they may actually have a stronger than expected relationship with Amazon getting into the fulfillment stuff. So I think Shopify just killed two birds with one stone, which is, hey, we may be the central site for people who don't necessarily want to sell on Amazon, but we're going to integrate Amazon into our service. I mean, as a small retailer, it's a win-win. And I don't think that Amazon minds Shopify taking some of their, maybe some of their clients and selling, so think of it this way. Okay, I've got a backpack to sell. And I want to sell it direct to consumers because Amazon takes 35% or something of the sales price. it's a pretty big portion because you have to warehouse it with Amazon, and there's a lot of costs involved. So I want to sell a backpack. This is why Nike doesn't sell on Amazon anymore. They sell direct to consumer because their brand is so strong. People will go to Nike.com. But say I've got backpacks.com, and I've got a backpack that is just super, super wanted by the backpacking community. I've got enough brand loyalty. I launch backpacking.com. And I don't want to sell on Amazon. I only want to sell direct because I've got the fulfillment. I've got everything of that sort. So backpacking.com is powered by Shopify, and Shopify is the back end of all of that stuff. It integrates all of their tools. It's got all of the software behind it, all of the apps that you can integrate with it, with the Shopify store. It's just a great central company. So backpacks.com does that. They sell, 500 backpacks a week, but they don't want to go on Amazon. Now with Prime on their website, they can go to Amazon and they can sell through Amazon, and they don't necessarily have to warehouse with Amazon. They can do the fulfillment themselves, or they can ship their backpacks to Amazon, probably through Shopify. I would think this is how this works. And it goes over there. Yeah. Shopify is expensive. Understand that stock is expensive. It is not making money on a EBITDA basis. So, they're losing $2.02 billion. They have a $76 billion market cap. They have tons of cash on hand. It's not a problem. They're not going bankrupt anytime soon. And what the CEO did was, when he undid the fulfillment, he took all the cost out of the business. So they will be profitable. I think they announced that they actually made a profitable quarter last time. Let me see. Did they go up? Was it a profitable one? Yeah, 14 cents. They made 1 cent and then they made 14 cents. They took the cost out of the business. And that's where you see that pop. And we've come back to cover a portion of that gap. You're going to use that 200-day. You're above the 200-day now. Old resistance at the 200-day becomes support. So I like this one. I like it a lot. Okay, let's go. Not owned. We're going to go to the Dow. And then I'm going to get started because I'm fired up. Fired up. Oh. Yeah, market just open. Indices check. So here's what you do on a daily basis. You open up your whichever brokerage you're in, and you say, okay, I am up 0.22%. The Dow is up 0.4, driven by Salesforce. The NASDAQ is up 0.18, and the S&P is up 0.5. I'm beating them. I'm beating everything but the Dow. And the only reason the Dow is up that high is because of Salesforce. And Salesforce actually has been quietly a big mover. Booking Holdings. Oh, come on. CrowdStrike. Marvell. Marvell is going to cover that gap. We talked about that. There's a gap up here in Marvell. See? Covered the gap already. 54 to 57. That was a nice one. I thought it was going to come down here to cover this gap below. Didn't quite. It got down to 52. But 50 days still moving. That 50 days is going to provide some resistance at 59. So, okay. Let us go to the S&P. And then I think energy, it's not too late for energy. AbbVie and Booking Holdings. Okay, let's go back to the strategy tester. And I'm going to look at 4 hour. And then we're going to look at SPY. I'm up 0.43. I have to give the dogs their heartworm pill. Rivka. Insider knowledge. Seeking Alpha is coming at me, and they want a partnership. So expect some. I do not have premium Seeking Alpha. They sent me a video of Seeking Alpha Premium. I think some people who don't get it may actually benefit from it and like it. It's about $250, I think, a year. I'd rather see you get TrendSpider, but for somebody who's just casually and doesn't want to learn charting, I mean, the premium Seeking Alpha might be good. And Christian, I agree with you, by the way, Sherry, on PayPal. I mean, I'm still holding PayPal. I still have a fairly big position in PayPal, to be honest with you, at a much higher price. But I like this gap up here between 67 and 73 getting filled. I mean, it has all the confirmation that you need from that 59, so 62 is not crazy. And I will go over why Tom Lee says we're going into a September boom. But AMC, I think you're right, Christian. I think there's enough retailer sentiment on AMC that we might see a pop. I just don't think that you trade this on a very long-term chart. Even the 65-minute might not be a short enough term chart to trade this on. I think a 5-minute chart might be the one that I would trade this on. Right now, you're up 5%. It's seeing a pop. Do I see this gap getting filled? No. They're continuing the dilution. They're losing money. I just can't. This company needs money. Adam Aron spent couple $100 million on a mining company. I mean, that just seems out of the way, crazy. He embraced the wacko clowns. What do they call it? The Juggalo posse. But okay, let me get this. But Seeking Alpha is coming after me. You might hear some ads on this one. I do think that Seeking Alpha has a place on this show. I use them for charting. And I've been honest with them. I think the only thing that I would use them for is this 10-year chart. But they do have some really good like quant stuff. And I like they've integrated some AI stuff, which I think is pretty innovative. And so I did reach out to them. I said, hey, I see you do partnerships. Would you be willing to do a partnership with me? And I'm not going to pump it unless I see some value. But I do think there's some people that listen to me that may not want to do the charting. And TrendSpider's a lot of work. I mean, honestly, it's a lot of work. I think Seeking Alpha is more just plug and play. And you look at some things, you read some stock charts, and you do Warren Buffett style trading, where you get some recommendation stuff. Christian, I think those percentages are probably decent. I think if you're risking 30% to make 100%, it totally makes sense. I think you're completely right on that one. This is what I wanted to show. 1 year, Salesforce is actually outbeating Microsoft on gains. So I'll show that. SPY, let me get into this. Okay, I'm going to hit record. Let me see. Oh, I need to get to TrendSpider. We'll go here. And then plans and pricing. Boom, boom, boom. Okay. I'm going to put, let me get my link real quick. Dashboard. If you signed up for TrendSpider and haven't gotten back to you, my apologies, but I'm going to pin this. That gets pinned. Pin message. That is the link for TrendSpider to sign up. So, and we're live on the market. So, okay. By the way, if you're not subscribed here, subscribe, but at least hit the thumbs up button, because there's been a bunch of people hanging out here, and the market's going really well. By the way, people are texting me. Okay, let's do this. Good morning. It is the last day of August, Thursday, August 31st. And I said I would do this. Well, there weren't many people. I started YouTube Live doing it, but I'm going to do it today. Boom shakalaka. And I say boom shakalaka because we're in a bull market. Let's talk about first. TrendSpider, you guys showed up in force yesterday. I had a bunch of people sign up. Again, it's the Labor Day sale. It goes down by 1%. You saved 65% yesterday. You're saving 64% today. It's $7. I mean, let's be honest. If you didn't sign up yesterday and you want to sign up today, it's $7 more. I still contend $358 is an easy one to make if you're A, trading enough, or B, have a big enough portfolio. You get my two algorithms, the 4-hour and the 65-minute. You get all of my watch lists, which are core investments, covered call ETFs, so like SPY, JEPI, all of that stuff. Energy names that I continually add to and take from. This is like, it's Chevron and PXD, all of that stuff. Levered ETFs like TQQQ, SPXL, all of that stuff in there. Low-cost Vanguard ETFs. Those are all just entries, spider sectors. Those are the watch lists that you get. You also get my market scanners. You get a 4-hour market scanner. You get a 65-minute market scanner. There's a couple in there. So you get all of that when you sign up, $351 for the year. Now, the process is click on the link that's down below in any of the broadcasts, whether it's on Spotify, whether it's on Apple Podcasts, whether it's on YouTube. All of it's video if you're watching the video. But there is a link down there. You go to plans and pricing. It will give you the best price. It is my link that is specific. What happens is on the back end, I get an alert. I don't get your email address. To protect your privacy, your relationship is with TrendSpider. I am simply an affiliate. So to protect your privacy, I get a portion of your email address. This is why I can't email you directly. You have to email me. So the first part is you sign up, you pay, then you email me, and I email you a welcome letter. Simple as that. It's nice and easy, very clean. Once you email me, I'm usually really good about getting back to you within 24 hours. So you'll be able to start playing with it. But TrendSpider is the main tool that I use to trade. I feel naked without it. I've told the stories many times before. I think I went 2 weeks without it back in 2020, 2021, somewhere in that neighborhood. Because I said, it was I think it was $700 I was paying at that point. $700, not quite worth it, blah, blah, blah. Let me see if they have a sale at some point. I'm going to trade with just Active Trader Pro. Boy, I felt naked. Those 2 weeks, I don't think I took a trade. I just felt naked without the 4-hour algorithm. And there's not a lot of charting software that allows you to do 4-hour. If you don't want to do maybe you have a smaller account, and you don't necessarily know about charting, and you want to try something for free, go to Linktree, liktr.ee/daily stock pick. Go to this third link. It's Webull. Put in a couple $100 into Webull. If you have Webull, download their charting software for your computer. It is the best option for free traders, in my mind. I think you click on that. I think you get a nice charting software. You can follow along with me. I don't know if they have 4-hour in there, but you don't need a 4-hour. You can do a daily. You can do a 10-minute. You can do a 60-minute. You can do whatever you want. But just get charting software. Get used to it. So let's talk about, first things first. The big mover. And we're going to go to the 65-minute algorithm and VFS. This is VinFast Auto. And if you're in VinFast Auto, kudos to you because you should have made a lot of money. This 65-minute algorithm got you in August 22nd with, $18? It got you out on August 29th with a 264% gain. I will tell you on the 65-minute, you have no confirmation. This is why TrendSpider is super important to have, because that 9-day, you're under that 9-day. So on this 65-minute, you can set up an alert. You don't have to sit there and watch charts. Set up an alert for when you get back into VinFast. Right now, it is down 12%. This is in the middle of pulling back. My guess, you get back down to 19. And what are you going to do at 19? If you're using this 200-day as the support level, you're going to buy it at 21. And maybe at 19, maybe it dips down a little bit more. But this is a hype stock. Don't be mistaken. This is a hype stock. Do not think that this is going back to 80 just because it was 80 at one time. This is another Mullen. This is another IONQ. These are stocks that you trade. You don't necessarily own them. You don't want to hold these for 1 year because you can make much more money trading them. Okay, let's talk about the indices, SPY and TQ and QQQ. The reason we wanted to get back into these and use triple levered ETFs, and yesterday's an update. Today's an update. We'll go over why today's an update. But yesterday was an update. So you're still in TQQQ. You're still in UDOW. You're still in SPXL. You're still in all of those triple levered ETFs. You've got confirmation on the base indices. So SPY, QQQ, and the Dow, you've still got confirmation. Here's SPY. And notice, yesterday, 2 days ago, we claimed the 50-day. So the 50-day didn't provide much resistance at all. That's why I say this gap up to 455, you're at 451 right now. 455 will be hit this week. You'll hit that gap this week. I think tomorrow you get back up into 455. Right now you're up 0.51. It is teetering just on positive, but I do think that at some point within the next 2 days, you get up to this 455. It's a 1% move. So if you want if you want SPXL, you can go for a 3% move. I think it's just a little bit too late to get in there. It's a Thursday. I don't like to hold those triple levered ETFs. I put an article in from Investopedia.com in the newsletter yesterday. Don't be greedy. And it's right at the top of the newsletter. If you get in, why 3 times ETFs are riskier than you might think. And if you don't have my newsletter, absolutely sign up, dailystockpick.substack.com. It is free. The only paid version that I have are the weekend versions. So it's free. And you'll get it in your email box, but usually before noontime, I try and get it in there. But I do think we have confirmation. If you go over to QQQ, we've got confirmation over the 50-day on the algorithm as well. So what are you doing with it now? You're sitting. I think you're sitting. I don't know that you necessarily buy back into this. In my mind, there's a couple of things that happened. Inflation was the big one. We saw this move on inflation. It just kind of fluttered around. Didn't make a huge move. Inflation was up 0.2% month over month. That was expected. It was up 3.3% year over year. That was expected. The last reading, though, last month, it was up 3%. So 3.3% is higher than 3%. That's not great. Everything that you've expected this year, year over year, has been really good. But because the month over month, because last month it was 3% year over year, and this month it's 3.3% year over year, the Fed in September could read that as, hey, we got to get inflation under control. Make no mistake about it. Back in the 80s, Volcker in the 70s, Volcker took this, and you saw it in the 80s. I mean, inflation just crashed down, but the economy crashed down. Powell is hell-bent on getting inflation out of this economy. He's hell-bent on getting it to 2%. Don't expect him to take the brakes off. The market is, I think yesterday I read it, 79% say it's going to be a pause in September. If for some reason that is a raise and not a pause, you will see a nice pullback on the market. What does that pullback mean? Remember, we are in a buy the dip and sell the rip market. It's not something where you buy the dip and hold it unless you're long term. If you are long term, this is not the time to say, oh my God, it's going to pull back, I'm going to sell. It's just going to be a speed bump. With this pullback that you're seeing in QQQ on your screen right now, we didn't come to the 200-day, but we didn't need to. It's clear we're still in a soft landing scenario. The market is pricing things in. We'll go over some earnings next, but I do think that I will post an article. This article, Tom Lee says that the markets, I'll post this in the newsletter, the S&P is about to take off in a month. Long rally that will retest its 2023 high. That's what Tom Lee says. You can read this article. There's a couple of quotes that stood out to me. Tom Lee says there will be a boom. Those stocks have historically been weak in August. They typically rebound in September. Since 1950, the S&P 500 has gained 86% of the time in September, tacking on a median gain of 3%. The coming stock rally could face resistance from several left field risks for markets. Lee warned the Fed may surprise markets by hiking rates, or if there's a UAW strike that could weigh on equities. Let's go to the seasonality of QQQ. Let's just look at the seasonality. And what we'll do is we'll look at monthly. We'll pull this back all the way before. It's going to go back to March of 1999. Look, August, 56%. September, typically weak, 46%. So you can take, now, if we change this to SPY, let's change it to SPY. Because he's saying over 50 years, it's risen in September. But I think he's having some caveats in there. 25 years, September's not, it's one of the worst months. So take it with a grain of salt. Sometimes these guys will manipulate the numbers and say, I didn't include some of the pullbacks on this. This was just when the first 6 months were good, blah, blah, blah. So take it with what it's worth. Now I want to show you this. This is the Golden Cross strategy from TrendSpider. They tweeted out, and I'll include the link to the tweet in my newsletter. But they tweeted out, XLE is a daily Golden Cross. Is it reliable for the energy sector? Since 2000, if you bought a Golden Cross and exited on a death cross, you would have crushed it by a hold with 62% win rate and an average return of 20%. If you sign up for TrendSpider, you just sign in and import it. And you've got your basically Golden Cross strategy. So if we just go down here and we go to the Golden Cross strategy, I think it's going to be down. There it is, Golden Cross strategy by TrendSpider. You can take this and we'll go XLE with the Golden Cross. And we'll see. XLE. Let's see if we're in. I think we're in on this one because I think it just had a Golden Cross, if I'm not mistaken. We're going to run this, and you can see the Golden Cross right there. We're going to wait for the chart to actually repaint. The Golden Cross is right here on the daily. So the Golden Cross runs 466% versus 237%. This is over 23 years. 23 years, 466% versus buying and holding only makes you 237%. So you double it by just using a Golden Cross on the daily. Just a Golden Cross, and you just hit the Golden Cross. And if we look, I mean, you're not at all-time highs on this one. The all-time highs are up near 94, 95. Let's see. Did we go higher? No. I mean, you're just hovering around the 200-day. So it's not crazy to think that XLE is going to go to 94, 95. Again, it's not. I don't think it's too late to get into this one. But when you sign up for TrendSpider, all you do is click and import. And you can use that Golden Cross strategy on any stock that you want. It's not just XLE. So I wanted to include that one. Let's talk about SMCI. This is super microcomputers. I am in this one. I've got a couple $1,000. It's not much in this one. I will be adding to it. It's got its confirmation. It has been moving with NVIDIA. Today it is down 0.21. I will be trying to add this one in the 250 range. I don't know if it'll get down there today. Right now it's trading at 267. I probably don't mind putting in some money in 267, just probably not a lot. It does have confirmation. The gap that I'm looking to fill that has provided resistance, you can see the resistance right there on NVIDIA earnings day. It went up to 298. In post-market with the earnings, it actually went above 300 that day. So This was pre-market. I'm sorry, post-market. This one where it closed at 277, which is about where I bought it. You can see it just hit right against that mark right there. It will fill this gap. It will go up to 350 and 345 and fill that gap. 100% it will fill that gap. So SMCI, I want you to take a look at it. If you want to follow me on any of my trades, Savvy Trader. SavvyTrader.com/daily stock pick. You can find me. I've got 2 portfolios. The 2 portfolios are a trading portfolio and a core portfolio. The trading portfolio is where I typically put some trades that I think are good. Daily stock portfolio, this is the core. This is just 36 stocks that I think you should use to build your portfolio. That's it. But SMCI is in the trading portfolio. NVIDIA, on the other hand, is in the core portfolio, and this is one that you just buy and hold. It's at $4.95. My ass didn't buy it down here. I thought it was coming back down to fill the gap at $4.30. It didn't. It used the top again. It used the 50-day as its resistance level when it got down to $4.48. That was the buy. Right now you have confirmation. It's probably going up above where I sold it at. I think I sold one lot at $5.05, one lot at $5.10. So NVIDIA's moving. This is one you just buy and hold. The valuation, it's crazy, but you can't get out of it. I mean, literally you can't get out of it. So Boyle, we're going to talk a little bit of energy right now, and then we'll go into Shopify. Boyle has a cross up 64.46. Yesterday it was up. Today it's down at 62. I think anytime it dips below 60, I think you buy it. I think it's going to 70 at some point in time. You see it ran up here to 71. I don't think this is one that you can, go into winter and natural gas. It'll just go up. I think natural gas is the one energy component that hasn't participated in the energy boom. So we'll talk about more energy stuff when that comes up on our scans. Shopify. There's a Shopify. I will include an article here from Yahoo Finance. Amazon and Shopify strike deal to open Amazon logistics to sellers. Remember, Shopify announced that they were getting rid of their fulfillment, and that was the cost center. It wasn't the revenue center. It was a cost center. So they saved a bunch of money. Now what they've got is Amazon in the works. So what did that do? That pushed the stock up 7%. I said, don't sleep on this under 60. Add to it under 60. I added to it under 60. I'm looking at adding it probably today at 65. I think this one goes back to 70. I think you're at $80 by the end of the year. The RSI right now is at 78. The MACD crossed up here, like we said. You've got confirmation. It blew through the 200-day. You had the death cross back here on August 29th. That gave me some hesitancy. When the 50-day crossed on the 200-day, that gave me some hesitancy. This announcement tells me these guys are moving into a partnership with Amazon, which will basically bolster Shopify, will give them all of their cost portion is now on Amazon. Amazon's happy to take it because Amazon actually can make money with fulfillment with their size and scale. So Shopify, it's expensive. Shopify's fundamentals, its forward PE is 80. As they continue to grow revenues, that forward PE will come down. Year to date, you're at 72% upside. You are still 15% below your $71 52-week high. You will blow through that 52-week high. I think with this news alone, with the continued roaring of the economy, I think you blow through that. I mean, I'm just looking at some of these core portfolio holdings. Snowflake, which was 140s. I said get in. That's going back up to 180s. Roblox, it's at 28.43. It's up 1% today. Shopify's up 8%. Let's see. PanW, which was down in the 230s. The absolute buy on that pullback. It's up 1.4%. Apple was up, 2% yesterday? Cleveland Cliffs is up almost 2% today. Let's talk about earnings. Now, I don't know. Do I have CRM? I don't know if I have Salesforce in the core portfolio. No, I don't. Salesforce is an interesting one because I've kind of fallen asleep on Salesforce. They back here had an earnings. It was March. And they had an earnings that just blew things out of the water. If you remember, Elliott Management and a bunch of other hostile crews were in this stock saying, hey, you're spending too much money. And it was literally during this time when you see it. We'll pull this back a little bit so we can see this around January, where people just started saying, hey, you're spending too much money. And that's what was killing it. And then the valuation kicked in. And they're like, Salesforce, Mark Benioff knows what he's doing. We're going to start getting into this, and we're going to start doing a little bit of hostile stuff. And so Brad Gersinger and a bunch of people with hedge funds got into the stock. The cross up here at 165 went all the way this day up to 193, and it continued to slide down. Wasn't a bad buy here. It's just continually gone up. And with earnings, they've shown, hey, they're spending less, but they're making more. This is a company that I fell asleep on, honestly. And we talk about Microsoft and the grade 8 a bunch, and Salesforce is not in that grade 8. But Salesforce, if you look at it over 1 year, they're beating Microsoft. They're up 34% versus Microsoft at 25%. And remember, Salesforce is in direct competition with Microsoft with Teams and their software services. So I think Salesforce probably has to be, it might get put into the core portfolio. I think they've turned it around. I think they're making a significant amount of money. And they're basically doing it. Now, I'm going to include the Stock Nerds portfolio. I can't beat his analysis of it. They beat on revenue. They beat on GAAP EPS. They beat on EPS. They raised their guidance. They raised their EBITDA guidance. They raised their GAAP guidance. They raised everything. It was crazy good. Crazy good. On the other hand, Okta, not on the other hand, but in addition to, Okta killed it. Okta is up 14%. You can see the pop even from open. It opened at 78. Its high is 86. Right now it's trading at 84. This is going to fill this gap up to 90. If you want to get in for a couple of percentage points and you're trading at 84, it's hype right now. I don't like buying typically at 84, but it's got that gap in its sight. They beat on earnings estimate, revenue estimates. They beat on EBITDA. They beat on earnings per share. They obliterated free cash flow estimates. That's what brought the stock up. They basically made cash. Full year guidance raised. Full year guidance EBITDA guidance raised. Full year guidance earnings per share raised. Unbelievable quarter. Unbelievable quarter. Look, 30 cents, 22 cents. It goes down. 20. That gap right there was because they announced 22%. They just beat that quarter at 31 cents and killed it. So Okta is one that you may want to get into. Let's look at Chewy. Chewy is one that actually killed it as well. It initially popped, and then they had the call. And the reason I want to kind of watch this one is they initially popped, and then they had the call. And it was, yeah, we're doing okay. So they beat the estimates, but it's still in a downward trend. They are down 12%. So I wanted to bring that one up. And my holding, CrowdStrike. CrowdStrike beat their annual revenue. It was flat when they announced, but it's since popped. And I just don't, I know why it's popped because the earnings were really good. They beat revenue. They beat annual reoccurring revenue, but it was only by 2%. And that's the problem is they were expecting, I think, 4%. They beat EBITDA. They beat earnings per share. They raised revenue. They raised EBITDA. They raised earnings per share guidance. So this was really good. What this is showing now, remember in August where we saw a bunch of companies beat and it went down? What you're seeing now is they're beating and it's popping. That's a huge difference to August. And this week is different because it's the end of August. So is Tom Lee right? Are we going into September with a bull? I think so. I mean, I'm ultimately a bull at heart, and I want to believe it. Tony Dwyer killed me with that on the tape podcast with, hey, we need to do this. Well, now good news is good news. Good news that the bad news is bad news, meaning that inflation's going up and the Fed may raise. So maybe we've hit that point. Just maybe we've hit that point. Oil overnight dipped, and let's go to the homepage of FinViz to take a look at some of the commodity stuff. Natural crude oil is up 1.3%. Natural gas is down 1.8%. Gold, whatever you want, blah, blah, blah. But crude oil, it did. Part of the reason it dipped overnight, it's probably coming back. Energy, it's not too late to get into energy. But it's because China output went down. And the assumption is China demand is going to be down. So in my mind, I think you want to stay in XLE. I think XLE, if you don't want to play single stocks, I would urge you in energy to play single stocks because you get a nice dividend. Some of the stocks that I own, Devon, it's back above 50. We talk about it all the time. Buy it at 48, make yourself a nice 5% gain. I have Devon. I have MPLX. I have MPLX because they pay a 9% dividend. I have Oxy. I bought Oxy, I think, at 56, 57. I've averaged it down. That line right there is where you can sell it because right at about 64, 65, it seems to just get resistance. The one that I really like and actually has a cross up today is PXD. PXD, we talked about. It's a secondary cross up. You're in that ascending wedge. Oh, no, it did get you out with a 14% gain, but it's gotten you back in at 237. I think it's a $250 stock. And while you're waiting for a $250 price target, you're getting what? A 6.94% dividend. And if they make more money and oil continues to go up, that might be as high as 11%. So I saw a note yesterday. ChargePoint, CHPT, I think is the, ChargePoint and Blink, two of the largest publicly held charging networks in the U.S., ChargePoint and Blink, have less than a year of cash on hand. Auto News says they are burning through cash quickly as automakers frustrated with poor charger reliability start to create their own networks. That's huge because remember, I own an electric vehicle. I will not buy an off Tesla brand vehicle because Tesla has the best charging network out there. There was a Wall Street Journal YouTube video with Joanna Stern and MKBHD, and it says it. He says, I wouldn't buy anything other than, if you're planning on going any road trips, don't use anything other than a Tesla. She wound up, spoiler, she wound up buying a Ford Mustang, whatever, GTE or whatever they call it. She wound up buying that because the price. I mean, the price just, you couldn't beat it against the Model Y. And the fit and finish. Honestly, you have to put up with probably a minimalist lifestyle in the Tesla. It is just one big screen. It doesn't have buttons. There's no buttons whatsoever. There's two stalks and there's a big screen. So for anybody that likes buttons, likes controlling their vents, you can't do that other than on the screen. I love it personally, but you have to put up with that. Palantir got downgraded. PLTR. Let me put this one. If I could type. Palantir got downgraded by Morgan Stanley. What's interesting is they got downgraded, but they upped the price target. But they only upped the price target to $9. I will be buying more on this dip. It's at $15.18. You can see we're in at $14.50. The 50-day has been providing some resistance. The 15-day is at the 50-day is at 1621. I'm sorry, I think I said 15, but it's the 50-day. That blue line right there. It's resistance. And until we get above that 50-day, you can expect more resistance right at there. And so you're probably trading in this range between 13 and 16. And you need some type of catalyst to get you out of that. This has been a run-up of 100%. You can see 80% right there. If you got in at that 782, you're still sitting at almost 100% gain. So don't expect this one to trade unless there's some type of crazy thing. Costco announced their same-store sales yesterday. Same-store sales were up 3%. E-commerce was down 2%. This is what we've seen from other retailers is that the e-commerce stuff is down, but the store stuff is up. And so you're seeing the return of the consumer to brick and mortar versus e-commerce. That's what we've seen. So Costco, we had talked about it a couple of days ago, had a cross up of 539. This is in the core portfolio. It's up flat today. It's at 543. You have confirmation. If you want to buy this one, if you go to Costco, if you're a Costco member, just freaking buy it. I mean, just buy it. it's going to be a $600 stock. They're going to announce a membership raise, and you're going to see it just go. Pot stocks soared yesterday during the after hours. HHS, Home of Houseland Security, I don't know, recommends cannabis, rescheduling cannabis. It'll make the weed business profitable. The taxes and the limitations on profits in the weed business, that's what's killing the weed business. So until they do this, I mean, you're in your final year of the presidency, so the administration may change. We know if Trump gets into office, weed won't become legal. He's anti-drug, anti-alcohol. So it won't become legal. I just, unless you can tax this stuff and make it legal, the pot stuff, I think you can trade. I'll bring up Tilray. We did have a cross up in Tilray. It is all hype. I mean, you can see even, Biden's announcement from a couple of months ago didn't do much. Tilray wound up buying a alcohol company. So I think Tilray is actually pretty well positioned in this space. I just think you could do better than pot stocks. Oh no, it is frozen. I think it is frozen. I will continue to do the podcast, but I think it is frozen, Scott. Oh, sorry about that. Let's continue on. Oh, maybe I think if you, let me stop recording. Okay. I think if you get out and get back in, let's see. No, it's frozen. Even if I get back in. I think it's YouTube. It's got to be OBS. Let me see. Oh, I've got good signal. Let's see. Bum, 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 bum. I'm going to do a speed test. There we go. Let's do a speed test. And you're not going to be able to see it, but it is freezing. The upload is what I want to see. My download is 350 megs. 304. Upload significantly down. But it should still have enough bandwidth. Upload is at 101. Here's my speed test. So you can see. I don't know why it's like that. I'll continue on. Where was I? Okay. Let me see if... Hold on. I got to check the recording. I think the recording should have...
estimates, but it's still in a
Oh,
down
mother
trend.
effer.
They are down 12%. So I wanted to bring that one up. And my holding, CrowdStrike.
Okay.
CrowdStrike beat their annual...
Even the